You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology for our friends in the credit union space, and we like to share as many of the insights that we develop as we can here with new content every Tuesday posted here at the Bigcast website. You can find out more about the Best Innovation Group by checking out their website, big-fintech.com. This week, we're going to be speaking with my friend from Beyond the Arc, the founder of Beyond the Arc, Steven Ramirez, about what caught our attention and really we think is worth bringing to everybody else's attention from the Finovate spring event that happened in late May out in San Francisco. So we'll be getting into that conversation shortly. A hint, the AI juggernaut is not slowing down. We got other things to talk about too, but that's definitely a recurring theme there. And speaking of that recurring theme, if you haven't already, the Best Innovation Group has started up its own service line around artificial intelligence support, specifically for credit unions who really need to be at the table thinking about this at a very minimum and starting to experiment with it, because it doesn't take a lot of attention right now to see the level of traction and the level of amazing progress just over the course of the last 90 days or so in the space. Encourage you to check out, again, if you go to the Products and Services tab of the Best Innovation Group website, big-fintech.com, you'll find the AI support service there, and you can find out more. Or just drop a note to at the website in general. I'm sure they'd be happy to get back in touch with you and share everything that will help you get down that path. There is a lot going on lately, as always, particularly in the regulatory realm that we can't do justice to, but I want to at least draw a few items to your attention, and you can do a little bit more research, and we'll add a couple of links to the show notes where you can find out more as well. The Credit Card Competition Act, the CCCA, better known in some circles as Durbin 2.0, the next round of credit card interchange, or card interchange regulation, I should say. Debit card was the first round. Now it looks like credit card is in the crosshairs. It's back in the latest session of Congress, and I don't know that I'm overstating it to say it's back with a vengeance. I think it's definitely got a little bit more momentum this time. It's interesting that the Republicans seem to now be taking the lead in pushing it forward, possibly because they may see a culture war angle on this one. This is me talking again, just the way I'm looking at it. When you think about some of the conversations around merchant codes and how that tied into potential gun regulations and things like that, I think that may be one of the reasons. So it does seem, don't forget, Dick Durbin, who sponsored the original bill and has still been very involved in trying to take this forward, is a Democrat. He was not even at the press conference, I'm told, when this last round has really kind of was brought more into the public realm. It's really the Republicans taking the lead right now. There's going to be a lot more to be said about this, but it definitely warrants watching. And if you're not already in touch, I'm sure your credit union league has probably reached out. You can find out more from them and see what needs to be done. It's a long trail, but it's always an interesting one. And Dick Durbin is a master technician. So even if he may not be the front person on it, he's probably figuring out the best way to slide this in somehow in the broader context of other must-pass legislation. There's also a couple of digital asset bills that are currently floating through Congress and, relatively similar, but have some differences to them. And that, again, more than we can really get into right here. You'll find some links again out at the website where you can find out more. And again, the quick search on digital asset legislation, and I'm sure it'll get you to some of the detail. And I'm sure we're going to be talking about that again in the not too distant future. The other thing that I've noticed recently, the CFPB, the Consumer Financial Protection Bureau, has gotten very vocal recently on a couple of topics, one of which ties in, and I noticed that their headline actually puts artificial intelligence and AI right into the headline in quotation marks, possibly for search engine optimization, because what they're really talking about is chatbots. And they're concerned about the subtitle of the press release they put out was "Poorly deployed chatbots can impede customers from resolving problems." Yeah, that's true. I absolutely agree that's true. So can IVRs. If chatbots, are really a way to get IVRs to hopefully be a little bit more responsive and accurate and user friendly. But if deployed improperly, I absolutely agree with them. I've had plenty of my own frustrations with that. So where that's going to go is another interesting question, but be aware. And I believe we have also got that link posted to that latest CFPB conversation out there. Perhaps more, in connection with some of the things we've talked about recently, is they've gotten a little more vocal about uninsured deposits. And I thought this was an interesting one. They put out a separate release really pointing out the bank safety, the deposit safety mechanisms that do not exist for any deposits that are held in non-bank P2P apps. And I'm sure these companies are just overjoyed about this. The official release that came out from the CFPB specifically calls out PayPal, Venmo, and Cash App by name. And those obviously are the lion's share between the three of them of market share of P2P apps, at least for the non-bank ones. PayPal and Venmo, of course, owned by the same company. Cash App, part of the Block and Square family. I've got to wonder how they feel about that one. It's factually accurate, absolutely true. Obviously, we're talking, I don't know, I'm sure there's some people who have thousands of dollars in their PayPal or Venmo or Cash App accounts, but we're usually talking about pretty small amounts compared to the $250,000 of insurance deposit protection. But it ties back to what I still think is either some real irrationality in the consumer's approaches to deposit insurance, or at least a lack of education. And frankly, I'm not sure which one it is at this point, because we talked a couple episodes back about other research that came out that said that nearly a half of consumers are currently concerned, quote unquote, about the safety of their deposits. And I don't really understand that one, whether it's just one of those leading questions, or if you think about the fact that your deposits are insured up to $250,000, the majority or the near majority or even the near minority of consumers in this country do not have $250,000 on deposit at their financial institution. So unless they don't understand that, or unless they don't believe the FDIC or the NCUA, if we're talking about credit unions, and most of the conversation for obvious reasons has been around the FDIC, unless they don't believe they're going to stand ready to actually make good on their promises, it doesn't make a lot of sense to me why that would be an issue. But if the survey says they're concerned, then they ought to be even more concerned about money that's sitting in non-insured PayPal, Venmo, Cash App balances that are on somebody else's balance sheet. And again, when I get back to the question of just how much do consumers really understand about this stuff, I wonder about Apple and Zelle at this point. Now, obviously, Zelle does not hold balances. It just runs directly, and this is the early warning system solution that runs directly through the banks. Doesn't hold separate balances in the account. It's actually just working directly in and out of one's transaction account. When people read this thing, do they realize that they never mention Zelle by name, but anybody who's close to this would say this is almost an advertisement for Zelle, which is interesting given how much banks think that the CFPB is out to get them. And then you get into a situation like Apple, which is not a bank, but is insured in terms of where they have the Apple money because it's working through their relationship with Marcus and Goldman Sachs. So again, if you're close enough to this stuff, it all seems to kind of tie together and make sense. If you don't, I kind of wonder how people are going to react to it. Finally, one more thing before we get on with our main attraction with Stephen Ramirez. Chip Filson. If you're not familiar with Chip, he's got a blog out there cleverly titled Just a Member. He's more than just your everyday member of a credit union. If you don't know Chip, he is the co-founder of Callahan and Associates, was formerly a part of the NCUA regulatory mechanism as well before that time. And actually all of Callahan, I guess, came through the NCUA before they started up the firm. But he's retired, but has stayed very active in blogging about things. And I've been particularly interested over the last month or so, where he's really gotten into some, I think, very timely and important topics around NCUA board meetings and actions and things along those lines. If you're not following along with Just a Member, I suggest you do. And I'll post a link to that one as well. But one of his recent posts really caught my attention. I get annoyed, and I've mentioned this a couple times. It actually came up around Apple savings. and the Wall Street Journal's coverage of people having a hard time getting money out of the accounts that they had set up. And we'll post a link to that one too. But that was a conversation we had last week that I think was really overblown by the media. And again, the banks are probably more than happy to see the tech company getting the grief about that kind of stuff than the banks and credit unions, who typically wind up on the other end of that conversation. But I thought it was really fascinating, the headline of one of Chip's, it's no longer his most recent one, but it's very relatively recent. Credit union CEO joins Iowa Bank Board. I was like, wow, that's interesting. And I've long thought that this bizarre kind of animosity that exists between credit unions and community banks is silly. And most of that animosity, in my view, tends to go more in one direction than the other, but I'm not picking sides. I think that there's, definitely some fence mending that could happen on both sides. But I've always thought there's more that unites us than divides us. I mean, there's, for the most part, community banks and credit unions are really after the same mission statement. There's no reason why there has to be such a level of fight to the death kind of attitude between the two of them. So I thought, wow, especially Iowa, a pretty good, solid state, kind of been known for having some pretty progressive thinking going on, a solid credit union base, a solid banking base. Wouldn't it be great? I mean, one of their banks would have been savvy enough to understand that it might make sense to have a credit union CEO on their bank board. Well, turns out that's not exactly what happened. The headline intentionally tries to lead you down that path because a credit union CEO joined the Iowa Food Bank and the bank of the Food Bank Board. Factually accurate headline. Great way to draw you in. Kudos to Chip Filson for doing so. Still would love to see a credit union CEO someplace sitting on a bank board, or vice versa. If you ever find out about it, let me know. I'd like to know about it. With that, let's get into our main attraction. Steven Ramirez, the CEO of Beyond the Arc, a research firm, which we'll hear about in just a moment. But let's have a listen to his thoughts from right there on the ground a couple weeks ago out at Finovate Spring out in San Francisco. I'm here with Steven Ramirez, who is the CEO of Beyond the Arc, based out in California. Actually, Steven, let me let you explain what Beyond the Arc is all about, and then we'll jump into the fun of the conversation.
Excellent. Well, thanks, Glenn. As always, love talking to you. So thank you for the invitation to join today. Beyond the Arc focuses on marketing and customer experience strategy for payments companies and banking. And what that means is that we work with banks both on sort of traditional payments products like credit cards and merchant services, as well as sort of new and upcoming offerings like instant payments.
And speaking of new and upcoming offerings, I think the place Steven and I really got to know each other is we tend to be the geeks that sit in the front seat every Finovate and take notes about all the different new solutions that we see up there. And unfortunately, this past round out in San Francisco, I was not able to make it. So I have deputized Steven to hopefully give a little bit more of some kind of color of what you saw out there over the course of the 3 days that you were out there at Finovate. My understanding was that AI kind of took center stage. Is that a fair assessment?
I think it is, Glenn, and as we've been seeing for years, there's definitely there's been a trend towards AI, and it started to just kind of like make its way subtly into the demonstrations that the companies present at Finovate. But really now it's we've seen it just kind of like be the main kind of reason for being. So and I think it's both in terms of kind of back-end capabilities, so being able to be predictive about how your service is actually offered, as well as kind of customer facing. So I think that AI and all of its various flavors definitely kind of high on the agenda.
I was going to say, I remember going back several years now. I mean, chatbots and things like that, which are a form of AI, were already kind of a really kind of sexy, sizzly kind of thing you would see on the stage. But now, like you say, it's kind of everywhere. And, given the timing of this event, I don't know that it was ChatGPT by name, but it was just, like you say, if you had an AI play, or even if you had even the slightest of AI plays, you probably really brought that out to the fore of the presentations.
Yeah, and then there's two ways I think that it's different. So two things that we're seeing in terms of AI in fintech. So I think the first thing is definitely a kind of a shift away from discussions of the heavy lifting that you need in order to be able to implement AI to a anybody can do it. You need to know nothing about machine learning or anything technical. As long as you understand, kind of your business questions, you can do AI. Like,
And
I think
again, that ties back to, again, we can thank ChatGPT for that, because just over the course of the last 2-3 months, that's exactly what it's kind of demonstrated to the world.
I think so, and I think that's the second point is that although there were not yet products that explicitly mention generative AI, and ChatGPT being one of them, didn't really mention it in terms of being incorporated into product, but certainly, a big part of Finovate are the industry conversations that take place, and in the hallways, on the panel discussions, in the keynote speeches, it was really about the potential for generative AI to be leveraged across financial services. So that really did come through loud and clear.
And then on the flip side, I'm guessing that kind of the crypto DeFi folks were kind of in the corner of the room, kind of going, "Remember us? We used to be the cool kid."
Glenn, I don't even know if they were there. It's like, DeFi. What's the crypto? It was really. I think. We are in San Francisco. I've seen it referred most frequently as like crypto winter, and I think that's really where we are, and I think that DeFi really does have some interesting and compelling use cases, but the fact that DeFi applications are built on cryptocurrencies and that now have incredible volatility and loss of value, it's hard to build a stable application on a platform that's incredibly volatile, right? So just inherent to that is it's not just, I think, that it's out of favor, but I think that there's just maybe now some of the fundamentals that it's not clear how you see a way forward.
So maybe some retrenchment there until you can decouple those 2 points. Because
I think that's it.
There still is that DeFi potential, but yeah, you probably have to separate it out from the piece that got people a little overheated in the first place, I guess you might say.
Yeah, and I think on the DeFi front, I mean, I strongly believe from the beginning that the greatest beneficiaries from DeFi are not, if that comes from quote unquote democratization, is really the biggest players, right? Like the biggest players benefit because they're the ones who can shave a couple of basis points off of their costs on gazillions of transactions, right? And I think that in that core kind of corporate audience, they're increasingly skittish about it, right? So not only do you have the issues of market volatility, but maybe some of the biggest potential beneficiaries don't want to touch, anything that's crypto related from a risk and compliance perspective.
That's a really good point. And another thing that you kind of raised there about the biggest players, I think Finovate took a bow. I believe they had all 10 of the top 10 US banks in the room. I think I recall seeing that in some of their promotional materials. But on the other hand, particularly for the West Coast version, often it's the venture capitalists that play a key role. And speaking of winter, I guess we have some challenges around that line as well in terms of less funding for some of these. I'm curious, did you notice anything in terms of a change of tone among the presenters? There's always that question of who are they primarily looking to reach as the audience? You've got investors, you've got potential partners, you've got potential customers. Did you get any sense that there was a difference of who they were trying to really tailor their message to?
Glenn, that is a really good question. If I reflect on that a bit, I think, and in San Francisco, you and I, we've seen plenty of those direct appeals to the VCs and to the investors. I think it was really squarely to the banks and the credit unions, and not even necessarily the big banks. It was just sort of the broader range of community and regional banks that people were really trying to pitch their solutions to. And I think that is in recognition of the fact that there's just a huge slowdown in the investment and VC side. And so if your fintech strategy is to make some sales and get to your next round of funding. That's not going to happen. And so I think that there's really is a doubling down in terms of trying to make these businesses more at least cash flow neutral as quickly as possible. And so I think they were really trying to reach out to banks as customers.
That's a good point. I mean, if anything you can do to extend the runway and make that existing cash balance last longer, and the best way to do that is by getting paying customers. Absolutely.
Funny how that works. Wow, how did you come up with that?
It was a blinding insight that hit me at some point over the course of the last couple of years.
Well, new to some in fintech, so.
So best of show. I mean, I know that there was at least one AI company, at least based on the names of the companies, had AI in the name. Savvy AI was one of the winners. Any thoughts you had? I think you mentioned, I mean, one of the best of show winners kind of stood out to you, but any other that didn't get the trophies that particularly kind of resonated with you?
Yeah, well, what hit me about Savvy AI is that they really have moved forward with this idea of no code AI. And the essence of their offering is really that you can incorporate AI with almost no prerequisites. Like so the thing that I think was most interesting to me was part of their pitch even said, you know what, you can do AI even without data. Right. And I'm like, wow. I'm like, okay, wait, AI without data is magic. Okay. Like that's all that's all that is. But their point was that even if you don't have the data today, that with an automated platform and the right kind of workflow, you can begin to capture the data that you need. And then when you have sufficient data to be able to generate, for example, recommendations, their process will automatically do that. So basically, it's collecting data in the background until it hits kind of a critical mass where it then can start to generate outputs from its models. So I thought that this kind of no code, ease of use for AI was really interesting. And although it's in a different area, there's also some similarities with another best of show winner, which is Flybits. And Flybits really talks about kind of a no code approach to creating customer experiences, and particularly digital customer experiences. So the idea that you can create these new, these new ways to engage with customers without having that heavy, IT requirement, right? You don't need to have back-end developers or front-end designers. You don't have to have, cloud architectures. It really is kind of a more, sort of drag and drop kind of approach to digital experience design, which is pretty compelling, right? So this idea of you can have these advanced technological capabilities, but accessible now to, in this case, banks and credit unions, really of almost all sizes and shapes.
That's interesting, and I believe that by the time this episode airs, the demo video should be up and posted on the Finovate site. So we'll post some links to the ones we're talking about and the others, so people can just have a look. I think, not too surprisingly, the other key theme, just based on what I saw from the list of the demoing companies, was security, identity, authentication. Was still, I think, front and center for obvious reasons, because that's obviously still a key pain point and a concern that people have in the financial services space. There was a winner called Wink that I thought looked pretty interesting. Any thoughts on them?
I don't know a lot about Wink in particular, but what I would say is I do feel like the focus on authentication, identity. We saw this also at Money 2020, right? So I think that this is this is an indicator that it's continuing to build, right? These companies are continuing to get traction, and I think that what we're finding is that there's a lot of complexity, right? That the fraudsters have gotten more and more sophisticated. They are using AI. And so now you just need, just to be able to protect against all the different types of threats. It's no longer a kind of a single solution. I think that's why we've sort of seen this greater proliferation.
That's a really good point. Talk about an arms race. I mean, if the
Right.
the fraudsters get ahead of everybody else in the AI, good luck to all of us. Well, this is great, Steph. I really appreciate you. I can't wait to see you in New York. I'm assuming you'll make it out there in September for the East Coast version of Finovate. But until then, if anybody wants to find out more about Beyond the Arc, what's the best way of getting in touch?
Well, we definitely engage pretty heavily in social media. So I'd love to have people follow us on Twitter at Beyond the Arc. Also reach out via LinkedIn. Again, I'm Steven Ramirez in the company Beyond the Arc. And we publish our own thought leadership on our blog, which is beyondthearc.com/blog. So any of those ways, Glenn, would be great ways for people to figure out what we're up to and our thoughts on banking and payments.
And based on what you've heard today, I think everybody would agree that is time well spent to track those down. Steven Ramirez, thanks so much. CEO of Beyond the Arc. Look forward to seeing you soon, and thanks for the update.
Thank you, Glenn.
So I was getting a kick out of that name Beyond the Arc, because I do happen to know that given that Steven lives in the East Bay, he is a big Golden State Warriors fan. And I just keep thinking of the three-point line and Curry and Thompson and crew and the Splash Brothers just firing away. And he won't totally dismiss the idea that they may have had something to do with the naming of the company, but he points out some other more business-oriented reasons for the name. Regardless of it, always great insights from Steven. I recommend you do go out to the website, as he mentioned, and take a look at their blog. A couple of other kind of pieces of trivia, I guess I'd say, about the winners of the Best in Show this last time around, the 6 winners that came up. We talked about 2 of them already, Savvy AI and Flybits. Flybits was one of the 2 repeat winners. And only 2 of the 6 actually had taken home hardware before from a Finovate event. It was a relatively young group, and that's been the case with the last couple of rounds of Finovate, where it's been more populated by newcomers, and also a great showing with those newcomers actually taking home the Best of Show kudos. But there were 2 winners who had won in the past: Flybits, which we talked about, and QuickFi, both of whom have again at past shows won. A couple of companies, when you do the alphabetization, I thought it was interesting, both start their name with digits and put themselves right at the top of the list as a result of that. 9 Spokes and 1 Cosmos, Cosmos with a K. And all of these are available now. As we talked about, it's sure enough, Finovate got the demos, the 7-minute demo videos posted before this has gone live. So we've got the link out there, and you can check out the Best in Show and all the other competitors from this past round at the Finovate website. So to take a look at that. The other winner that we spoke about already was Wink. And one of the things that's interesting about that Finovate's Master of Ceremonies and Head of Marketing, Greg Palmer, pointed out to me, is they pulled off something of an interesting repeat winner of themselves, in that their CEO used to be the CEO of another company who in prior life had taken home some hardware from Finovate. And that company was called Swytch, SWYCH, which I remember particularly liking back when I saw them a while back. They were a mobile gifting platform. So interesting stuff on all fronts there, and already looking forward to the Finovate Fall coming up in New York City, where I will be on the ground. That'll be September 11th through the 13th, and I'm pretty sure if you go out to finovate.com, I believe the registration page is already open and live. So I hope to see you out there. Along with, that's kind of the beginning of a busy season, as we always run into in the conference world around fintech, credit unions, and banks, and be making the rounds. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvati. You can track me down via my firm, 154 Advisors. You can find me on LinkedIn, on Twitter at 154 Advisors, or you can drop me a note here at the Best Innovation Group website as well, big-fintech.com. If you go to the Media tab, you will find lots and lots of past episodes when we talked about Apple savings, and we talked about generative AI and issues that have come up with AI lying to you. Check out the last couple. I think they've been really interesting if you got some time. And if you want to check out the Best Innovation Group, other than that website that I already mentioned, you can check out our Grand Poobah, John Best. He is at JB FinTech on Twitter, and the firm overall is Big FinTech on Twitter. With that, we'll have some more content. Got a great interview that I'm going to be recording in just a couple of days, and that'll be up with our new content on a weekly cycle next Tuesday. Until then, as I say, stay in touch. Drop a note if you like. Subscribe if you're interested, and hope to see you again next week. Thanks again for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.